Today is Wednesday, August 27th, 2025, and today I am down over 3%, down 3.43%, so pretty bad day for me, mostly because of Robinhood, I'm pretty sure. And then, of course, my Roth IRA is only down 0.3%, and this is on a day where the NASDAQ was green, but I guess it's down after hours. And if we take a look at my recent transactions, I did go ahead and close that covered call for Robinhood at the 125 strike, just in case. It was kind of pricey. $860, whatever. But I still think there is a possibility for Robinhood to hit 125 if it does get included in the S&P. If it doesn't, it is what it is. But I still have those two covered calls at 170. And of course, as of right now, I have the two covered calls in Palantir, the two covered calls on Robinhood, and I have a cash secured put on Nike. And it looks like Robinhood today was down over 5%. Nike slightly down today, 0.89%. Palantir down slightly over 3%. Pepsi up almost 1%. Honest is up over 2%. RAPX up almost 2%. SoFi down almost 3%. PayPal down almost 1%. MAA up over 1%. And then, of course, American Express just up 0.5%. Now, the big news for today, of course, is actually the clothing stocks. So today, Kohl's did report earnings, and it looks like the market loved what they heard. It is up over 23%. American Eagle is up almost 8%. I believe it was up 10% earlier today. Levi's, of course, it also had a great day. It was up over 1% today, but down slightly above 0.8%. VFC, of course, it's up almost 3%. And it looks like Nike is the only one that is slightly lagging today. Now, those of you that have been following me for a while now will know that I have been talking about this for a while, where the clothing stocks could potentially see a short squeeze or at least a turnaround. And today, of course, it really looks like that story is playing out. Kohl's having an amazing earnings reaction, and it's starting to feel like a lot of the shorts are going to get squeezed out here. American Eagle, I believe they announced some collaboration. I'm not really sure who these people are. Like I said, I didn't even know who Sydney Sweeney was, to be honest with you guys. But apparently there's another collaboration, and that stock is up almost 8%. It was up 10% earlier today. And then a VFC up almost 3% on an analyst upgrade. So, like I said, I try not to be a conspiracy theorist, but it kind of feels like all of this is planned out. With the Kohl's short squeeze, and then the Sydney Sweeney American Eagle controversy viral moment thing, and then I think Trump also talked about American Eagle a little bit, so that was kind of random, maybe not random. And slightly less talked about, of course, Levi's. I think they had some collaborations. One of them was with Beyonce. And then VFC, whole bunch of investors like I think Michael Burry bought some VFC. And then, of course, the analyst upgrade. I think that was yesterday. But yeah, like I said, it really feels like a lot of these companies are, kind of trading with each other. The news is starting to help support these stocks. And of course, I almost forgot the Nike earnings reaction. So all of this kind of happening around the same time. Maybe it's a coincidence, maybe not. But it is what it is. Burberry, of course, also. Burberry has been doing amazing, actually. It's been a very quiet, sneaky stock. Well, maybe not this month, but this week it's up 10%. 3 months is up over 32%. Year to date, up over 46%. So Burberry has also been a quiet stock. And of course, with today's standouts, not much to talk about. I still have Canva on this list just because I like to keep an eye on it for a potential future opportunity. But Win was actually up huge. And Win has also quietly been like a sneaky winner recently. It's at $122. Year to date, up almost 42%. If we take a look at the all time, this is a stock that was in the 200s. So it could potentially hit 200, of course. And I've already cashed out most of my position. I only have like 3 shares, and I only kept my 3 shares because that was just profit of what I had in the stock at the time. But it is what it is. I have a few shares in some other accounts. But also, I wanted to update you guys on some of the calls that I have in my E-Trade account. I did go ahead and close my Levi's one. I believe I was up like 71% on that one today, but I decided to keep Kohl's and American Eagle. So American Eagle, I'm still kind of slightly down, break even with that call. But the Kohl's one is up 100%, and it expires next year. So I decided to just go ahead and hold on to that. All right, so now we have a couple comments from previous videos. And in my video titled, "Is Hood Undervalued?" Asuka has thoughts on ASTS. It's the number 2 in my portfolio. I glanced at the chart a little bit, and it seems like it's been doing pretty well. I have never heard of this stock, or maybe I have heard of it, but I just kind of ignored it. But I mean, it looks like some kind of space company. I don't really know too much about it. It looks like it's performed very well. I think it's free cash flow positive, if my memory is correct. Maybe I missed that opportunity. I don't know, but it looked okay on the charts, and like I said, it was free cash flow positive. So I don't really know too much about it though. Leave No Evidence says, "I believe your covered calls are safe. Just take profit on this dip we got. My advice is always do long dated cover calls so you have more time to be correct, and theta can chip away over time even if your timing is bad." And yeah, that's kind of why I chose the December and January strikes. I guess I kind of made that mistake with Palantir because I had little short dated ones, and then I just kept rolling them out into like December and then January, a little bit into next year. So instead of basically dealing with that headache in the future and constantly have to keep track of like my loss wash, my taxes and all that, I'll probably from now on just kind of sell depending on what kind of move I think is going to happen. If I think it's a short-term move, I'm still going to do like 1 to 3 months. If I want to play a little bit more, maybe 6 months, or like towards the end of the year like I did with the December ones. Or if I think it's kind of like a higher time frame play that it's going to take some time to play out, like I said, a lot more into next year. So even if I am wrong by that time next year, I can just roll it out, and I don't really have to worry too much about loss washing because it'll be well into next year. And Joey asks, I've seen other traders mention TradingView before. It always seemed weird to me to pay for a charting service given you can get charting on so many free services. What does TradingView offer that the free options don't? Can you show us how to use it and what technicals you look at things? So yeah, Joey, I mean, yeah, you can get free technicals. I think Yahoo Finance has like a generic charting thing. I think some brokerages offer generic charting stuff like Fidelity maybe. I'm not too sure. I don't really use those too much. I only use TradingView. But of course, Robinhood now also has Robinhood Legend. And that one also, I kind of think it's generic. It's not as good. Maybe it's just because I'm so used to TradingView, but I still think TradingView has a ton of options. Not that you need it though. To be honest with you, I've had TradingView for a long time, and that's just what I'm used to, but the subscription isn't big enough to actually get me to cancel it, if that makes any sense. Like, I've tried using the Robinhood advanced charts, but I just like to be able to see clearly, and I don't think it's as fluid yet, right? User-friendly. I think TradingView is still a lot more user-friendly and a lot more like visually appealing, a lot more customizable. But to give you a little example of what I'm talking about, I'll go ahead and pull up the advanced chart. So right off the bat, I mean, this is just hideous to look at in my opinion. Right now, I believe it's the 50 and 9 moving averages that I have up. I don't even know how to really use this, to be honest. Okay, I mean, so it's like kind of similar to TradingView, I guess, but it's still kind of glitchy, I think, with Robinhood, and still not as visually appealing. Let's see what indicators I have. So I have the 15-200, I guess. Yeah, so I have the 15-200 EMAs. As you can see, just like some basic technicals, you had that initial short squeeze with Kohl's, and then it came back down to retest. This is kind of where I started buying up shares, just a little bit in some separate accounts, and of course my call. And now it seems like it's breaking above that 50 moving average, possibly going up to 25. But let's change over to the dailies. Yeah, so I mean, okay, yeah, so I still don't really like this Robinhood. It's hard to use, and maybe that is just because I'm so used to TradingView. But as you can see, like just some basic technicals that I look at. I mean, there's a gap right here, 16, and I mean, what do you know? It's at 16 right now, so eventually that gap was going to get filled. Now, keep in mind, gaps are not 100%. Nothing in life or finance is 100%, but there is another gap right here at the 11. So I guess what is this? Okay, so there were two gaps here, right? So it was a double gap right here. It broke above for that short squeeze and then came back down to fill that gap, and then once it filled that gap and retested the support, it broke right back up. And of course, it was on this earnings. So that's kind of just some basic technicals that I look at. I know a lot of people, a lot of gurus like on TikTok, whatever, YouTube, Instagram, X, they like to pull up all of these super complicated charts. And some of them are pretty useful, especially like economic indicators and whatnot, like liquidity. And the Sam Bennett chart is, of course, pretty famous. But when it comes to actual indicators that I use personally, I've used a ton of indicators, but I've learned that it just doesn't really matter. Like, you'll have so many indicators, and to just give you an example of what I'm talking about, let's just add Bollinger Bands, just to make my point that none of this really matters. So, I mean, I guess you could have looked at the RSI and said that it was overvalued and that it was due for a pullback to come down and fill this gap. But like, yeah, it did happen, but did it happen because the technicals were saying it's going to happen? No, it happened because people were selling it. But the technicals, I guess people were looking at the technicals while trading the stock, right? And just to make my point even more, during this period of consolidation right here, you could argue that it's just consolidating around the moving average, but you could also argue that it's just consolidating with the Bollinger Band. So it doesn't really matter what indicator you use. It doesn't matter if you have 20 put on your chart. Your wins and losses are still going to be dependent and based on you, if that makes any sense. So let me just get all this crap. Okay. You see, I don't really know how to use Robinhood, even though, like, I mean, that was really simple and easy, but I'm just really used to TradingView. All right, and now we're on TradingView, and just to show you guys a little bit of why I like TradingView a lot more. I mean, I have all of my boxes right here and the aligns up here that I need. Very convenient, easy for me to reach. I have all of these earnings dates right here. I have all of the dividends, of course. It shows me the ex-dividend date, the amount, the payment date, everything that I need. These lines right here, the red, this is actually smart money. This is a smart money indicator. So basically this indicator, it tries to just analyze support and resistance zones that it thinks big money is playing in, right? So right here, this would just mean big money sold this off. So it might be potential resistance in the future. And if you were going based off of that, I mean, you could have said, yeah, this right here during this little short squeeze, it retested this resistance and came right back down. So, I mean, you could have said it was because of the indicator, but in reality, I mean, people just sold it off, right? And this indicator up at the top actually is actually a custom indicator that I created a long time ago. I honestly forgot what it consists of, but I've used it for so long. And basically what it is, it's kind of like the RSI, MFI, which is the money flow index. And it's basically similar to the RSI. It tries to identify oversold levels. So this right here, if I can get it to work, you could have said that this right here was oversold, maybe. It doesn't guarantee you're going to win money, of course. But like I said, the moving averages, like how I was showing you guys, a lot of the moving averages were crossing over. The smart money right here, it looks like some smart money was buying, or according to the indicator. I don't know like for sure if big money was buying there. But as you can see, there was a blue highlight right here. The moving averages were crossing over, lots of resistance up here. But also you'll notice on my indicator, this red dot, and this red dot I basically placed as a change of momentum. So anytime there's a change of momentum, it could signal that it's gonna basically this move is gonna happen. It could potentially signal that. Now obviously it's not 100%, because if you look back here, there's like this weird signal right here. So it was like a fake out, right? So if you take a look at when it signaled, you could have looked at that red dot and been like, okay, this is the time to buy, and then you ended up losing more money, right? So it's not 100%. That red dot is to signal a potential change in momentum, but then that green dot was like, no, it's actually going to go back down. And what do you know, it went back down. So like I said, it's not 100%, but it is an indicator that I created a long time ago and I've just used ever since. I don't always use it to place trades. I just look at it as a reference, right? I just like to look at what's been going on, right? And as you can see, the indicator did not work very well up at the top. Tons of signals, and it's basically just the stock. I mean, it broke down, but it's just consolidating, right? So like I said, not 100%.